What if the biggest silver signal right now isn't a price chart, but a move Warren Buffett already made years ago? And Wall Street hopes you forgot. Because while everyone's distracted by daily volatility, something much bigger is quietly lining up beneath the surface. Back in the late 90s, when silver was boring, ignored, and trading under $5, Buffett stepped in and bought nearly 130 million ounces of physical silver. No hype, no interviews, just conviction. The media laughed, critics panicked. And years later, he walked away with massive profits while everyone else asked, wait, when did that happen? Fast forward to today, and the setup looks eerily familiar, only bigger. Silver has already exploded higher, yes. But here's what most people miss. Price isn't rising because of speculation. It's rising because the world is running out of silver. For 5 straight years, demand has beaten supply. Mines are producing less. Industrial demand is accelerating, and silver isn't optional anymore. It's required. Solar panels, EVs, AI data centers, 5G infrastructure, they all consume silver, and there's no cheap substitute. Meanwhile, JP yes, that JP publicly warns silver could crash while quietly holding one of the largest physical silver stockpiles on Earth. Same bank. Opposite message. If that doesn't raise an eyebrow, it should. Remember, this is also the same institution fined nearly $1 billion for manipulating the silver market in the past. So when they say sell, smart money listens differently. And here's where things get spicy. Paper silver is trading in a market where claims massively outweigh physical metal. There are multiples more paper ounces promised than real ounces available. That works until it doesn't. When physical demand tightens and delivery matters, price doesn't move politely, it gaps. That's how silver behaves historically. Long periods of frustration, followed by violent repricing. Yes, volatility has been wild. Silver ripped toward triple digits, then slammed lower. But volatility isn't failure, it's stress. And stress is what exposes broken systems. Buffett never chased green candles, he chased imbalance. And today's imbalance is clear. Shrinking supply, expanding demand, strategic buyers accumulating, and paper markets stretched thin. That's where asymmetric upside lives. Is this about getting rich tomorrow? No. Is this about recognizing a setup that only becomes obvious after it's gone? Absolutely. You don't need to go all in. But ignoring silver entirely right now might be like ignoring it in 1997. Comfortable at first, expensive later. Because when this market finally resolves, it won't ask permission. It'll move fast, and it won't wait for consensus.